Good morning. We'll call to order this meeting of the Board of Trustees of the Tennessee Consolidated Retirement System at approximately 10 a.m. on June 12, 2026 in the Cordell Hall building in Nashville, Tennessee. I'm David Lillard, Tennessee State Treasurer and Chair of the Board of Trustees, and I welcome you to this meeting. We'll start with a roll call by our Secretary and Executive Director, Jamie Wayman.
Mr. Archer. Here. Commissioner Bryson. Mr. Edmondson.
Here.
Secretary Hargett. Mr. Haynes.
Here.
Chief Head. Lieutenant Jackson.
Here.
Treasurer Lillard.
Here.
Director Long.
Present.
Miss Maxwell. Miss Moore. Here. Comptroller Mumpower. Commissioner Williams.
Present.
Mr. Wormsley. And I'm present as well. You have 10 members present.
Okay. Quorum is declared present then. Item number 3 is the next item, minutes of the March 13, 2026 meeting. Any questions, comments, et cetera, in regard to the proposed minutes that were in your materials? Seeing none, is there a motion to approve? Motion. Have a motion to approve
Second.
by Anthony Haynes and second by Commissioner Williams. Is that right? Okay. All right. Motion and second on that. Any discussion? Seeing none, we'll do a voice vote. All those members in favor signify by saying aye. Aye. Those opposed, no. The ayes have it, and the minutes are approved. Next item is item 4, Board of Trustee Committee Reports. First item is item A, the Administrative Committee, and Mr. Wayman, our Executive Director, will give that report.
Thank you, Treasurer. At the Administrative Committee met this morning at 9 a.m. in Conference Room D on the 8th floor. Our action items were to approve the minutes of the March 13th, 2026 board meeting or audit committee or administrative committee meeting. We also had a presentation by Mr. Joe Walker for the Leoma Utility District seeking participation in TCRS effective July 1st, which will be taken up at a later time. I provided an update related to the legislation that was passed by the 114th General Assembly that impacted TCRS. We also provided an overview or an update on the ARIS project, which is replacing our pension administration system, and the project to convert the data for that system. We had an operations update for both TCRS and financial empowerment. And with that, that was everything that was reported to the Administrative Committee.
All right, any questions, Mr. Wayman, in regard to the Administrative Committee report? All right, seeing none, next item is item B, Audit Committee, and Commissioner Juan Williams chaired the committee today. Commissioner?
Good morning. The Audit Committee met this morning at 8 a.m. We covered a number of items, including the comptroller audit opinion letters where there was no issues. We also reviewed the internal audit results, which had overall satisfactory rating. There were no issues there. We reviewed the internal audit project tracker, and everything is on time. And finally, we reviewed any updates that's relative to pension administration or overpayments legislation, and we did discuss the impact of new laws. So that is the summary of the Audit Committee results.
Right. Thank you. Thank you, Commissioner, for that. Is there any questions of Commissioner Williams in regard to the Audit Committee report? Seeing none, next item is item C, which is the Investment Committee. I chair the Investment Committee and will give the report. Your committee met this morning and approved various investments for the retirement system. We also received investment reports from the staff of the investment division, as well as from the outside advisors of Cerity that were present in the meeting as well. Any questions in regard to the Investment Committee? All right, seeing none, next item is item 5, Political Subdivision Seeking Participation. Mr. Wayman, I'll let you present that item.
Thank you, Treasurer. On page 23 of your board packet is the Leoma Utility District, who is seeking participation in TCRS effective July 1st, 2026. They have 3 employees. They are not covering part-time employees, so part-time employees are not eligible. They're not providing prior service credit. They are including cost of living adjustments. They're seeking participation, and it's what we refer to as the legacy pension plan effective July 1st. The employer rate is 6.9%, and the employees will contribute 5% of pay to the plan. The Administrative Committee made a motion for me to make a motion in this board meeting to accept them or to authorize them to participate in TCRS effective July 1st, 2026, and I make that motion.
Okay, there's a motion by Mr. Wayman. Is there a second? All right, we have a second by Mr. Wormsley. All right, to admit the Leoma Utility District to the regular defined benefit plan. Any discussion on that matter? Seeing none, we'll do a voice vote on this. All members in favor signify by saying aye. Aye. Those opposed, no. The ayes have it, and the matter is approved. Next item is item 6, the investment report, and we'll call on Mr. Michael Brakebill, CFA, our Chief Investment Officer, to give that report along with outside consultants from Cerity.
Thank you, Treasurer. I'd like to turn over the performance report discussion to Mark Brubaker, Cerity Partners.
Thank you. I think you have some recent additions to your packet. Is my mic on?
Turn it on there.
There you go.
Okay, thank you. I think you have some recent additions to your packet. So the first thing I wanted to go through, which we went through with the investment committee, is the capital markets update. And we'll start on page 3 of that document. And should note, like unlike normal quarters, we're actually looking forward, looking ahead. This report is through May. I think it's relevant just given everything that's gone on in the marketplace. And probably the biggest news that took place today is SpaceX. Their IPO came to the market today. Company's valued at they raised $75 billion, valuing the company at $1.8 trillion, and that's implies a 103 times the price to revenue is 103 times, which is quite amazing. So there's a lot of hope with the XAI and Starlink and future revenue streams there. But it has been issued. They raised their capital. It has not, as of about 2 minutes ago when Michael and I checked, it has not begun trading yet. But that's the largest IPO in the history of the U.S. stock market. The other big story, obviously, in the first quarter was our attack on Iran, and that really impacted markets. Markets had been relatively flat through February of 2026, and then after the attack, the markets were generally down, both U.S. and non-U.S. The S&P 500, you can see there for in the second quarter, it's up 16.3%. So a really strong quarter thus far in the second quarter. It had been down 4.3% in the first quarter. So we've had a rally there. The one thing that's interesting, though, on both sides, in the first quarter, the Mag 7 stocks were down 7%. We've talked about the Magnificent Seven, for many quarters now, leading the market. They led it on the way up, but they did underperform and lead it on the way down in the first quarter. And they still, even despite this rebound we've seen in the second quarter, they still trail the market on a year-to-date basis. I think one of the things that we're seeing is there's it's become an arms race, a capital expenditure arms race for data centers, et cetera. And I think there's a lot of question, concern about where is the return on investment going to come from. And so I think there's maybe a little bit more skepticism around those Magnificent Seven names today than there was a year ago at this time. The other big story, if you look quarter one to quarter two, energy stocks, primarily due to the impact on oil of the attack on Iran, energy was up 38.2% in Q1. It's down 8.8% thus far in Q2. Information technology stocks were down 9.1% in Q1. They're now up 36.3% in Q2. So we've had quite the reversal in the markets on those two sectors as well. If you look down below, what we have, the bottom grouping of numbers is fiscal year to date through May 31st. So it's 1 month shy of being your fiscal year in terms of these indices. And so you can see really strong results across all equities. The large cap equities is measured by the S&P 500, up 23.5%. But the real story, I think, is if you look at the small cap stocks at the Russell 2000 index, up 35.7%. And again, if you think back to prior meetings where we talked about the mega cap stocks dominating the market, what we've seen more recently is a broadening of market returns and strengthening of the small cap and mid cap stocks. relative to large cap stocks. And then the other thing I would point to, if you look at the far right-hand side, emerging market stocks now up 45.6% on a fiscal year-to-date basis through May, really driven by semiconductors as well as the chip manufacturers in South Korea and Taiwan, among other things. If you go to the next page, just very, very quickly, we can go through fixed income returns. And again, I'll focus down at the bottom with fixed income returns. You could see that the Bloomberg U.S. aggregate there at the left-hand side, that measures the broad investment-grade U.S. bond market, up 3.5%, which is roughly the interest you would earn on the bonds on that index over that time. That was roughly the yield to maturity going in. So we have had a slight uptick in interest rates, which causes downward prices in bonds, and you can see that more pronounced in the long Treasury index there at the middle of the page, up only 1.8% fiscal year to date. And then to the right of that, we have the high yield, the leveraged loan index, as well as the emerging markets indices. The spread sectors continue to, as a whole, outperform the investment grade sectors of the market. Spreads are at historically tight levels, so you're getting paid very little now to take credit risk in portfolios. And then lastly, the last grouping of numbers on slide 5, real assets, which these are all asset classes that tend to have some correlation, positive correlation to inflation. And you can see there at the bottom of the page, REITs up 17.5% on a year-to-date basis, commodities 37.2%, and gold itself is up 37.2%. And that's been an interesting one. It has ran up very strong through February. It peaked well over $5,000 per ounce in February. It's now down 20% from that high in February, which is unusual because you think of usually in times of global turmoil and that capital flies to safety, gold being one of those places, you would have expected gold to be positive. It actually ran counter, and part of that's due to inflation fears, the strengthening of the dollar, and the expectation that yields are going to remain higher for longer. And with that, if there's any questions, I'm happy to answer them on capital markets. Otherwise, I'm going to turn your attention to the draft performance report. And this is a draft. There were a few outstanding items that did not get reconciled in time for this meeting, so I apologize for that. But you can see there and I'm just going to cover the 2 pages that you received. So you can see the total assets of the fund were about $79.7 billion, down a little bit from where they were at calendar year end due to negative returns in the markets. You could on the next section, you can see the target allocations to each of the broad asset classes and the actual allocations. No major changes there. You can see that there's an over allocation to private equity by about 1.9%. Again, and that's an illiquid asset class, and so that overweight is more or less offset by the under allocation to the total U.S. equity at the top of the page. But everything's more or less in line with the overall policy ranges. If you go to the next slide with the performance, as I mentioned, a slight negative for the first quarter of 2026, down about 1.1% for the total fund. However, if you look longer term, those numbers are quite strong on an absolute and relative basis to peers. For 1 year, you're up 12.2%, 3 years up 9.7%, and 5 years 7%. And those all rank well above median when compared to other peers of your size and type. A couple things to just quickly highlight on the asset classes here. And you can see first, I wanted to highlight U.S. equity. That's one area where returns have been relatively strong. If you look out longer term, the 3 and the 5 year and even the 10-year number, but especially the 3 and 5 year number, they rank well within the top decile of your peers. And so that was an area that that was struggling for a while, and that has bounced back nicely in recent years. On the flip side of that, however, we have the international developed markets equity, and you can see there in the middle of the page, down about 3.2% for the quarter and trailing its policy benchmark and ranking in the bottom quartile of the peer group. That's something that we're keeping a close eye on that. You have a number of managers. A lot of your managers focus on quality growth names, and quality growth stocks have really, over the past 2.5 years internationally, have not fared as well as other stocks. And in fact, last year, for example, the International Growth Index returned half of what the International Value Index returned in 2025. So that's something that we're continuing to evaluate. We still have a high degree of confidence in your managers and in the structure, but we're going to be taking a deeper dive and closer look at that with Michael and his team. And with that, I'll leave it at that. And if there's any questions, be happy to answer them.
Okay, any questions? All right. Seeing none, thank you.
Great. Thanks, you all. I would like Daniel Cruz to introduce our summer interns.
Hello, everyone. I'm Daniel Cruz, the Deputy Chief Investment Officer from the Treasury, and introducing our summer interns. For our summer internship, we focus on graduate students, and we bring in a couple of graduate students, and every year they re-underwrite our commercial paper issuers. They participate in all of our internal team meetings. They meet with external folks, complete special projects, in an effort to expose them to as much as possible and to add value for TCRS and our platform. The ones we've had, the interns we have this year, in 2 weeks they have already met with the CEO of Apollo. It's a $1.1 trillion firm. There's digital assets with the CFA of Nashville Society. They've met with all of our internal teams and leaders in an effort to confuse them with as much jargon as we possibly can muster. But they've been fantastic, and I think off to a great start. So I'll let them introduce themselves.
Hi there, everyone. Thanks so much. My name is Summer Brown, and I will be graduating this August from Middle Tennessee State University with my master's in finance.
Hello, everyone. My name is Brennan Crook. I am pursuing my MBA at Vanderbilt, and I will be graduating in May of 2027.
Thanks, Daniel.
Thank you.
Glad to have you both. Moving on to kind of talk about or to address my presentation, I generally do with you. We look at inflation, growth, valuations in the marketplace, monetary policy, some things on the market that Mark touched on a minute ago, and in the portfolio update of where we are in the near term. On employment, that's an interesting. Employment is a very interesting thing to watch right now, because if you'll notice in this graph, you'll see this is the ADP and non-farm payroll changes. The dark blue line in the center is a smooth number, so you can see it's starting to kind of move up. We had a recent improvement in the non-farm payroll number. We had an improvement in the ADP, which is another payroll number. And so those look better. It could be statistical noise. You know, when we see a lot of press that comes out on these items, you get things right off the bat that say employment has turned, it's great, and really you never really quite know in a very short run if that's true or if it's statistical noise. But right now that looks better. A downside of that, or another side of that, is that the actual percent of the population that is in the workforce has fallen year to year, as Carrie mentioned in the investment committee meeting, which hasn't happened for a long time, probably as a function of our low internal population growth and immigration policies. So that's something that hasn't happened in a long time. So we're going to keep a close eye on that. And it obviously impacts growth, and it impacts inflation. We're not really seeing inflationary pressure from the employment market right now because wage growth is fairly low, and also productivity has been very high. So that actually looks, any measures of that look very good right now. Housing is one that we have talked about as we walked through the whole period in the COVID boom, and we had our inflationary bubble. In this graph, the bottom chart shows year-to-year changes in existing home prices. And the reason this is important is when we had that big spike in 2022, that was a function of an inflationary impulse. There was too much money flowing through the economy that flew into home prices, and home prices boomed as we all watched. And at that time, there was no doubt that the Fed had to address that and bring that down. That can't continue. And happily, that has. The Fed policies have brought that down. We had a recent kind of rebound in that a little bit, but it's turned down, and it's just barely above 1% year to year. So, and in housing, as inflation flows through the economy, is essentially tamed now. You have a 1% year to year. Everything we see for rental growth, as an example, apartment rents are flat to down year to year. So, so the part of inflation, which is a sizable part of CPI, is housing, looks good right now. The other side of that, obviously, as we've come through this recent spike in commodity prices, energy due to the recent conflict. We've seen a spike in those, and so core, inflation pipeline looks kind of problematic. So goods inflation, we're definitely kind of keeping an eye on that. That's a different part. Another, on the other hand, is that auto prices. We just had a release in the Manheim Auto Index, and the year-to-year change in used car values essentially is about 1%. So housing is kind of flat year to year. Autos are kind of flat year to year. You see a lot of inflation and other things, but those are some big categories that have moderated, that are a big positive in my mind. The Federal Reserve, I've been showing you this clip from the quarterly beige book. And it's interesting because it always kind of is a little counter to the broad narrative, especially a narrative of economic strength. And I just think it's interesting what they say is economic activity increased at a slight or moderate pace for 10 of the 12 districts. One had a decline and one reported no change. So that's a pretty tepid outlook from the Federal Reserve. And in employment, I usually don't include that, but it's the next paragraph in their report. And it said, they showed little or no change across 11 districts, and one district had little growth. So, we have some numbers that look better on employment. The Federal Reserve is saying we're not seeing a whole lot. So, so it's interesting how these different things that are going on simultaneously. One of our data services we get from a research firm called Evercore ISI has a weekly survey of managements of different companies across the industry. That's firmed up lately. So that has looked better even in the course of what we've gone through with this recent conflict. So again, we'll keep an eye on that, but that has looked better. Moving on to markets, valuations remain really stretched for stocks and actually look okay on the next page for bonds. So one would think, okay, we should be invested less in stocks and more in bonds, which sounds good and sounds prudent, except for the fact that it really hasn't worked. The things that have really worked is the risk side has really worked. Stocks have done, as Mark led you through, have done really, really well, and bonds have done okay. So, this simple analysis of valuations would say stocks look rich here, and the next page here on yields on valuations for bonds, they look a lot better than they have in a long time. So that would make one think that you should move in that direction. And I'm kind of like that, but it just really hasn't worked on a relative basis. And when it does, it probably will work really quickly and scare us all. Monetary policy is one thing we've covered for a number of years, and how Fed funds rates and how the federal policy will evolve over time. I didn't update this over the last few days, which I think it probably has gotten a lot better because of the recent news that oil prices have been falling, stocks have been a little firmer. Based on it, does look like we're having a deal with Iran to cease this conflict. On the monetary policy side, that would flow through, and that we would have lower rate forecasts in the future. I didn't update this chart, but from the start of the conflict to today, or to when I put this chart together, Fed funds futures, or what that means is what investors are betting that short-term rates will be in December of this year, went up from basically 3% to 3.05 to 3.85. So 0.8% increase in what they thought rates would be at the end of this year. And again, that should be better right now than it has been, but it shows you how investors' views of the Fed will have to stay tighter for longer got embedded into this. Private credit concerns are one that we had talked about before, and we talked about that at the last meeting. I asked Neha Sakaria and Strategic Lending to grab me a chart, and we pulled this together. And what this shows is it shows how localized those concerns have been. And the red line on the bottom is these are both the prices of fixed income products, prices of bonds. And the red one is on software bonds, and the blue one on top is everything excluding software. And you see a decline in prices. I will have to give you a note here that the scale is really compressed, so it makes it look a lot more dramatic than it is. If this scale started at 0, you could barely see the change. But essentially what this shows is that the AI concerns for software companies have rolled into their concerns for private credit, and that's what you see here. Why that is a case is that people are concerned that artificial intelligence tools will supersede a lot of software companies' business models. AI is a positive driver of GDP growth, as Mark mentioned, strong growth in a lot of companies, and especially a lot of economies, big growth in valuations and essentially suppliers into the AI story. This stock price is Micron Electronics, which has been around forever. It's a maker of memory for, I always think of it as back in the personal computer days, they were the DRAM company that we all had. And it has gone up basically 10 times over the past 2 years. So a 10-time increase in the stock price, basically on the back of this AI story, as this boom in memory needed to go into AI. The last time I showed you a chart on NVIDIA, which is the processor company behind this, which is the poster child company, but it's across the board. South Korea, as an example, has had a huge boom in their stock market, and we've happily participated in that. One of the key companies is a company called SK Hynix, which basically has the same business model as Micron. They are basically direct competitors, so both of their stocks have just soared. A deflationary impact, and this is what I mentioned on the software side. This is a graph of large cap software stocks. I had showed you a graph last time that showed the individual thing. This is the individual entities in their stocks. This shows an index of all of them, and basically it shows that the concerns about AI have been embedded into the prices for software stocks, and so it is a concern that it's a deflationary impact into the economy. And the war, obviously, we know that prices for oil and gas are oil, not gas, but prices for oil soared in the war. This was an inflationary impulse, and you can see that where the red arrow is right when it started. So, it soared right as a function of that. And we're seeing at this moment some good that's coming down. So that'll be very helpful going forward. Finally, on the portfolio today, this is a few days ago, we hit $83.4 billion. it's up a little more than that, but from the performance reports you have for the end of March, that's essentially a $4 billion increase in value. So a really nice rebound in what we've seen. The peak value was a few weeks ago, or a week and a half ago, at 84.6. We're above 12% fiscal year to date, which is a great number. It's not amazing, but boy, that's a healthy number. And if one would have listed all the things that we would have worked through this year and said, what do you think returns would be? They probably wouldn't be what you got. So I would have picked a lower number. So I'm very, very happy and satisfied with that. We're slightly overweight equities and a slight overweight to international equities. And I believe, if you see the chart, we have our emerging market portfolio on the table. I think that portfolio is up around 60% fiscal year to date. So it has had a stunning move. And if you look at what Mark showed you in the handout for the MSCI Emerging Market Index, I believe Mark said it was about 45. The difference is that we don't invest in China, and that excluding China has mean that our portfolio has outperformed by that much just on its own. So we've had a good period of that without China. So with that, that's all I had. It's like I said, it's very gratifying. We're coming to the fiscal year. We just have a few weeks left, so hopefully we can go forward with this 12+% number, and that'll help out the pension a great amount. So with that, that's all I had, and love to take any questions you might have.
All right, any questions of Mr. Breakbill in regard to the investment report? Thank you very much, Michael and Mark, for those great reports. Okay. All right, next item is item 7, legislative update. Mr. Executive Director Jamie Wayman, would you give that report?
Yeah, thank you, Treasurer. So in your packet, I put 2 bills that were enacted during the last legislative session impacting TCRS. The first one I'll talk about is our TCRS housekeeping bill. It's Public Chapter 658. It primarily does 3 things. One is it updates outdated language as it relates to how TCRS responds to subpoenas. The second is it changes the final payment due on account due to the death of a member. Current law prior to this bill said that the payment had to go to the beneficiary of the member. This says that the payment will be made to the member themselves, to the member's account. And then third, several years ago, we instituted a compliance provision that said if we discovered somebody that retired between July 1st, 2021 and June 30, 2025 that did not have a bona fide separation from service, that we would consider that an in-service distribution for that period of time. This bill would extend that deadline to June 30, 2027. The second bill in your packet that was enacted by the 114th General Assembly is Public Chapter 1110. Prior to the passage of this bill, there's been a ability for an employee or a member of the retirement system that had a temporary period of disability that was on workers' comp to be able to establish that retirement credit in TCRS. To establish that credit, it's limited to 1 year per incident, but to establish that, you had to pay the employee contributions required during that time, which for hybrid plan members and teachers meant 5% of your salary to establish that service. This bill would allow for those covered by mandatory retirement, such for the state would be THP officers, TBI, TWRA, to be able to establish temporary periods of disability at no charge to that employee. Similarly, local governments participate in the retirement system who have mandatory retirement for their public safety officers, such as firefighters and police officers. If they adopt this provision, those individuals could establish service credit in TCRS free of charge for periods of temporary disability. And with that, those were the 2 bills that were enacted by the General Assembly during the 114th General Assembly, the second half.
Any questions, Mr. Wayman, in regard to that report on legislative update? Our next item is item number 8, which is areas in the data conversion projects update. Mr. Wayman, I think you're up on that too.
Yes, sir. And Bridget is going to bring the slide up to show. All right. So in your packet should be a slide that shows kind of the project milestones and through go live. As you'll recall, we started the ARIS project in August of 2024. There were 3 pilots. The project is divided into 3 pilots. We finished pilot 4.1. We've already had all the design sessions. They've actually come back to us in December, and we were actually able to utilize the system to test it to see the look and feel of it for what they had programmed to that date. We're now in pilot 4.2. The functionality that's included in this pilot includes kind of their core business things such as processing retirement applications with processing refunds, service credit purchases, legal documents, death benefit processing and recalculations. Currently, we've completed the design for legal documents, service credit purchase and transfers, withdrawal processing, and payment account setup. We're close to signing off on administration of external pension plans. And over the next 3 months, we will begin looking at service retirement processing, benefit payroll module, disability benefit processing, and death benefit processing. Again, the go-live date for the system is scheduled to be April of 2029. Also, in conjunction with this project, we were working with a vendor named MBS. MBS is helping us to extract the data from our current system and convert it to a format and so it can be loaded into the new pension administration solution. We're currently in pilot 4.2 for that data conversion. We have 12 features and nine data cycles in this pilot, and it will go through May of 2027. As I've mentioned before, the entire Treasury Department is pretty much involved in this project, from accounting to my staff doing day-to-day work with their day-to-day work, plus working on this project, financial empowerment, internal audits involved, IT. So it's a major project. All of us are pitching in, and I'd like to thank the staff and everybody with the Treasury Department for all the efforts they've done put into this project. And with that, that's the update on the data conversion and ARIS project.
Okay, any questions, Mr. Wayman? We're certainly looking forward to the successful conclusion of ARIS and the data conversion project as well. Should be very revolutionary in the Treasury Department. Our next item is item number 9, opportunity for public comment. Is there any public comment for the Board of Trustees today? Seeing none, let the record reflect that there is none. Next item is item 10, other business. Any other or new business for the board? I don't believe there is any, really. And then the next item would be adjournment. Before we do that, I want to note that on the agenda, it points out that future meetings of the board are tentatively set for September 11, 2026 and December 11, 2026. So you can mark that on your calendar as a tentative date. And that also immediately following this meeting, board members who wish to participate can see Jamie Wayman for our board training sessions, and where we furnish the greatest box lunch that you can buy as an attribute to get you to come to the board's training sessions. We're going to have the experience study, and what was the other topic today?
Option factors for survivorship options.
Okay, all right. A very interesting and exciting set of topics to discuss. And if you're a board member, it's good to learn about that. All right, do we have anything else to come before the board today? Seeing none, I move we adjourn. Is there a second? I have a second. All right. All those in favor signify by saying aye.
Aye.
Those opposed, no. The ayes have it, and we're adjourned. And thank you for your service to the TCRS, the retirees of Tennessee, and the people of the state. Thank you.